Hey everyone, today we're going to do something different than what we normally do. We're going to break down the earnings of a company, Cameco. So why is Cameco so important to the uranium sector as a whole? Well, they make up around 15% of global production, and they're a pretty big fish when it comes to uranium. Also, their financial statements really break down the uranium sector as a whole, so if you're into uranium, you really should be reading Cameco's financial statements. Now, Cameco is so important because when you break down the size of the uranium market, it's quite small compared to other commodity markets like, let's say, copper, gold, or oil. In 2022, for example, the world produced just under 140 million pounds of uranium. At today's prices of around $100 per pound, that would make it a $14 billion market. But in 2022, the price was around half that, and of course, there's contract and spot market implications, but let's just take half that figure of around $7 billion. Now, that's obviously peanuts compared to copper or gold, which are markets closer to $200 billion, or oil at close to $2 trillion. So here we have one company that puts out earnings that make up around 10 to 15% of global output, and the changes in their production are really important for what that can do to price dynamics. Okay, so on the surface, Cameco's 2023 results were great. I myself said as much in a tweet that I published minutes after the results came out. In terms of estimates, Cameco was a beat on revenue, but missed on earnings per share, or EPS. Analysts expected $815 million in revenue, and Cameco blew it out of the water with revenues of $844 million for the quarter. But they were 4 pennies shy on analyst expectations at 25 cents per share. For the full year, net earnings were up 151% on 39% revenue growth, while EBITDA jumped 91%. But dig a little deeper and the problems start to surface. Big problems. Let's dive in. All right, so we can do this in one of two ways. Either I can sound like someone on BNN or CNBC and run through the numbers and pretend it's super interesting, or I can have my editors put the data on the screen here so that the nerds out there can get their fix. And then we can move on to the interesting parts. Yeah, we're gonna go with the second option. Okay, so let's get into the juicy parts. First, Cameco has had some production problems. In September, after production wasn't going as planned, Cameco was forced to cut its guidance from 20.3 million pounds of uranium produced in 2023 to 18.7 million pounds. And then they still failed to hit that number, instead producing 17.6 million pounds. So they went from guidance of 20.3 million pounds to producing 2.7 million pounds less than that. Why? Well, aging infrastructure at McArthur River, a shortage of experienced operators, and unplanned maintenance work, among other issues. And those production problems led to the company being forced to purchase uranium on the spot market to meet contractual obligations. In years past, the low uranium price meant this was generally fine for the company. But a rising tide apparently doesn't always lift all boats. In the fourth quarter alone, the company produced 5.7 million pounds of uranium, yet they purchased 6.3 million pounds. So let's just hammer that point home for a second. They were forced to purchase more uranium last quarter than they actually produced. And the company on average purchased those pounds at just under $90 Canadian a piece, while only generating about $72 in revenue per pound for what they sold. Now, there's some nuance here, as the company has a joint venture with Kazatomprom, from whom they purchase uranium on a spot basis, but get a return via a dividend each year. In reality, 2.8 million pounds were purchased off the spot market at an average price of around $106 a pound, which is even worse. And yet, things may not get much better. Cameco for 2024 is forecasting 22.4 million pounds of production, but their recent track record doesn't inspire a lot of confidence in their ability to hit that number. Yet the company is slated to see sales of 32 to 34 million pounds of uranium in 2024 based on current contractual obligations. It has already committed to purchase 9 million pounds, 4.2 million pounds of which are related to its Kazatomprom joint venture. Cameco, meanwhile, expects to purchase up to 2 million pounds of U3O8 on the spot market, which continues to rally. And we should probably note that the JV is unreliable in terms of actually getting their product out of Kazakhstan due to sanctions in place following Russia's invasion of Ukraine. And Kazatomprom is having production issues of its own, thanks in part to a shortage of sulfuric acid, leading the company to cut its production target midpoint from 65 million pounds to 57 million pounds for 2024, with production also likely to have problems well into 2025. Basically, it wouldn't be shocking if they had to buy more product on the open market than planned. Nonetheless, Cameco is expecting to see an average realized price of around $75 a pound, that's Canadian, while its unit cost is somewhere in the ballpark of $57 to $60 per pound. Not exactly numbers you get too excited about when uranium is trading above $100 a pound in US dollars. Now, let's touch briefly on the price of uranium. At the time of recording, it's hovering just under $100 a pound after seeing a massive run that sent it as high as $107 per pound. The price has been running following supply shortages and production shortfalls, particularly from Kazatomprom and now Cameco, along with high demand from investors who have been rapidly buying up Sprott's Physical Uranium Trust, which now holds in excess of 63 million pounds, or roughly 3 years of Cameco's production. Logically, investors think higher prices, higher income, which should translate to improved cash flows, especially for the world's second largest producer. But that's not the case. Cameco's filings actually state that for every US $5 increase in the price of uranium, they lose $49 million in annual cash flow. Yes, that's right. The higher the price of uranium, the worse it gets for Cameco's cash flows. But at least revenues go up slightly, which I'm sure will work for some retail investors. In fact, if uranium were to completely moon and go to $120 per pound or even higher, Cameco expects to still take in about $59 US a pound in revenue thanks to its current contract portfolio. They could always sell excess product at market prices, but their current guidance doesn't really support that based on production and commitment levels. Overall, the quarter wasn't that bad for Cameco. They beat revenue expectations and only had a slight miss on earnings per share. But there are some concerns that investors should be aware of. I also have to tip my hat to Cameco, who leads the charge in the sector when it comes to reporting financial statements and data for the industry as a whole. If you really want to understand the uranium world, their MD&A is worth diving into. You can learn a lot. Now look, I'm a degenerate small cap gambler, so I'm always looking for torque. Now, as I'm filming this, the price of uranium has dipped below $100 per pound, something that many people in the uranium community told me would never happen. Still, though, I'm a bull on uranium. I think that over time, the trade is going to pick up momentum thanks to the Sprott Physical Trust, which has jolted the price of the underlying commodity out of its range that it was stuck in for nearly a decade. That being said, Cameco is the name to watch if you're following the space and looking for data. How quickly they can bring product online, along with some other names like Kazatomprom, who already has reduced their guidance, are going to be key metrics to give us a glimpse into where the volatility may take us. Fortunes were made in the last uranium run, and from what I can tell, we're still in the early innings here. And many of the more torquey plays haven't seen the types of runs you would expect given how the price of uranium has ran over the last 3 years from under $30 a pound to over $100. In my view, the best bets will be the near-term producers or the cashed-up companies with great land packages that have the ability to take lots of shots at lots of great targets. All right, guys, let me know what you think in the comments section. Are you following Cameco? Are you long Cameco? Where do you think the price of uranium could be heading? And what are the names that you like? All right, everybody, thanks for watching. And if you enjoyed this video, please smash that like button. And if you haven't already, please subscribe to our channel. Thanks, everyone.